Welcome everyone to the webinar on MTF on ICICI Direct. I'll just give you a context of what we're going to discuss today on the webinar, and we will also show you a platform demo as well. So first of all, and just to kind of set the context, this webinar will be on English, and that's the language that we will discuss. And you could also, put up all the questions on the YouTube link. So one of the things, luckily markets over the last many years, not now, have been kind. Almost all dips which have happened in the markets, they've been bought. So investors, investing in markets obviously are looking at opportunities. And during this presentation, we will discuss on how to spot such opportunities, including the ICICI research. And the second thing is when we, do feel that there is an opportunity in the market, we would, kind of look at investing our money. And at that point of time, a lot of times we are short on funds. We are fully invested. We invested some other stock. That stock may not be doing well, and we may not want to liquidate the stock. So, there are opportunities, and we want to kind of look at, buying into markets, and that point of time, MTF, which is called as margin trading facility. In simple terms, you can buy a stock today. You're not paying the amount which is required to be paid today. You're paying the amount after a period of time. And that's what MTF is. There is an interest cost which comes in this. But broadly, it is as simple as, what you do with any other, way of taking a funding on the positions. So let me just share a screen and let me just start with some of the ways people experience it, right? So as I said, the biggest call investors take is the asset, which is, at this point of time, let's say 25,000 levels of the market, markets actually come down to 24,400 levels. And we believe that, with GST, with US markets being stable, there could be an upside in the markets, and if Nifty were to break 25,200, 25,300 levels, there could be there could be a momentum in the markets, and one would want to play such themes. So one is to get a good grip of the market, right? And then is to take a position, and which we will talk about MTF, which is very, very simple. That you look at buy the stock, you see an opportunity, and then you buy a stock, on the funded positions. So let me just, again, but the difference here, unlike FNO where you're taking a view on the market, is here you're taking a view on the stock. So one of the fundamental things is, if you're taking a view on stock, is, which stocks to look at, when you're trading. So one option that you have is, you look at ICICI Direct Research, and you look at stocks from the ICICI Direct Research side, and we will discuss more in details. Many of you are familiar with the kind of calls that we give on Gladiator. So if I were to just put up that here, so let's say, we've today, in fact, we recommended Gujarat Fluoro. The stock has actually kind of moved up well. Or L&T we recommended at 30,600 levels. And you could see here the stock is trading at 3,000, almost 3,700 levels. So one is that at ICICI Direct, we would be advising our customers, on certain stocks, and you can look at here, all the stocks that we've given up. And I just will give you a strike rate. Our strike rate for the last 10 years stands around, 8 out of 10 stocks. This year, we are sitting around, 7 out of 10 stocks have made money. But it also means that 3 stocks have not made money, which one must be cognizant of. That, even on the research that we give, though we will look at identifying very good companies, that's a fundamental criteria that we apply in every recommendation we give. But it is also possible that, the stocks that we do, recommend do not do well. But the first thing is, one is, you look at the research from ICICI Direct, which is available on the investing ideas, and there are medium term, which is around 3 to 6 months ideas, because in MTF you're taking a short term position broadly, so you will like to look at kind of research which are catered to short term. The second thing, before I go to the kind of research you could do on MTF, now do you buy a stock in MTF? is also set this alert on WhatsApp, because the most important thing with for many people is that okay, how do I get these research from ICICI? And the one of the simplest thing you could do is set up the WhatsApp alert, which means that anytime we will release a research note or a view on a stock or on a stock, that would come to you on your WhatsApp on a real-time basis. So that's the second thing which I think would kind of help our investors, access the research, because that is fundamental to kind of, deciding which stocks to kind of buy. The second thing which I wanted to take your time and I want to show you was on screeners, right? And one of the things with screeners is that there are various plays in the market. So one of the big plays, let's say, let me just say, people look at stocks where there is a lot of delivery volume happening, right? I mean, and we've kind of created multiple screeners, but I'm going to run you through a couple of them. And let's say I want to look at auto stocks, because if you look at the GST cut, auto stocks are a big beneficiary of the of the GST cuts. And as you could see here, there are sales referred by Hyundai, Maruti, which has kind of done well. So you want to look at, let's say, within the which stocks are moving up in terms of delivery volumes, which stocks are the volumes are increasing. The volumes are increasing typically means that there are more strong hands, and if there are delivery volumes are there, that means the non-speculative volume is much more. So you could go to the screeners on ICICI Direct and then look at certain conditions to trade. So if I were to let's say look at some more conditions with you. So let's me just look at, let's say, companies making good profits with high ROC. You could do that, or let's just look at certain technical screeners also, right? And technical screeners, again, there are various screeners that you look at. Let me look at a technical screener of breakout. Where the stock is at second level of resistance, which got broken out. In simple terms, if I have to say, for people who invest actively in markets, a little bit of momentum based trading works. Momentum based trading kind of helps. So the first thing which I would say on the screeners is on the technical analysis. So one of the things with technical analysis is that it works on human emotion. And I'll give you an example of Tata Motors. And, it's a classic stock. I mean, a lot of us follow this stock very well. Tata Motors trading, and if I were to open up the Tata Motors chart, as I would, do here, if you see Tata Motors stock, I mean, for, we could look at last 5 years, the stock was actually trading at 600 rupees. It came down to 400, came down to 300, came down to in fact 100 rupees as well, right? And if I were an investor in Tata Motors, bought 600 rupees Tata Motors, in 5 years the stock is trading at 100 rupees. The only thing which the frustration which is there in the mind of the investor would be that the day I kind of get my price, I'm going to exit the stock. So now what happens is that when you're holding on to the stock for years, and if the stock is giving you negative returns, and if the stock is moving now, has started, let's say, moving up, you think that if I get my cost price, I'm going to exit. And now from Tata Motors, from 100 gone to 200, gone back to 300, gone back to 400, 500, you believe so what is happening is a lot of weak hands are getting out of the market, and then the stock is still continuing to rise, which means and at 600, almost all weak hands are on the market. So so there is a momentum in the stock, and it's all human nature, right? I mean, for 5-10 years we have seen negative in the stock, so you kind of rather look at exiting the stock at the first opportunity. So these momentum then kind of play in the stock itself. So in technicals, I mean, these these things then work wherein you would look at buying the stock, and as I said, you go to the screeners on ICICI Direct, and as we referred, let's say a technical screener, wherein we are looking at there is a resistance 2 which is broken out, and in Nifty 50 stocks. So now if you look at it, let's say NTPC wasn't doing so well for a long number of period of time. Now suddenly there is some movement in NTPC or ONGC. So you could look at various screeners on the platform. I mean, they could be technical screeners, they could be fundamental screeners. Which let's say, I mean, it could be candlesticks, it could be moving averages. I mean, one of the simple moving averages that there is a 200-day price of a stock, average price of a stock in the last 200 days. Let's say Reliance is around 1400 rupees, and Reliance over the last 50 days is trading at around 1450 rupees. That means it is trading above the 200-day moving average, and people believe that's a kind of a good signal. And you could then look at such stocks. So let's say Maruti, Ultratech. I mean, these are stocks which are trading above, and we've seen the price of Maruti, Ultratech also. So I'm just saying, there are various screeners which today are possible on ICICI Direct, and you could kind of look at that as well as, to look at, as to from which stocks. So as I said, the simplest is to look at, the recommendation from ICICI Direct. What are we saying? And, herein as well, not a single stocks, we also, recommend on a portfolio. Right. So, I mean, which are the railway stocks which are likely to do well if you believe capital goods is a theme, or consumption, right? With the GST cut, consumption is a theme. So, which are the stocks that we believe are likely to do well? So it's a full basket that we have created. And, once you're kind of convinced on which stock to do, I mean, all that you're doing is, executing the trade. And let me just come to that, which is on execution of a trade. So if I were to, let's say buy Hindustan Lever also had a management change. So if I were to buy Hindustan Lever, or let's let me take any SBI card, any stock, any stock that we're looking at buying. All that we're doing is, we would select MTF here, and if we select MTF on this stock, we could we could buy that stock on MTF. So if I were to, so that is one of the simplest way of executing the trade, which is on MTF. So let me, you can go through our standard offering on place order. Let's say you want to buy ITC, and all that you're doing is just selecting pay later here. Suppose you want to buy 100 shares of ITC, and if you select pay later here, so if you think about it, so let's say if I'm buying 1000 shares, I would actually pay 1000 into 401 rupees, which is 4 lakh rupees to buy ITC. If I just select the pay later option here, I'm actually paying just 1,14,000 rupees. So this is how you do it. You just go to the ICICI Direct website, and on the ICICI Direct website, you just select pay later here. And as you can see here, instead of 4 lakh rupees, and I'm paying 1,14,000 rupees to buy the stock. Now that's point number one, which I'm paying just a lakh rupee, 1,14,000 to be precise. And now this stock of 1000 shares will get credited to my demat account. So I get the credit to my demat account. Obviously, these are not fully paid shares, so they will be pledged on behalf of to ICICI Securities, and then you could hold the stock for the next 10 days, 15 days, 1 month, 6 months, 1 year. So till 360 days. If ITC, suppose ITC after 25 days happened to touch 425 rupees, you could simply go and sell the stock at 425 rupees, and the 24 rupee profit into 1000 shares, that's around 24,000 rupees profit that credited to your savings account. So it is very, very simple. You just go on the buy section, you just toggle pay later here, and you could buy the stock with just a margin of a lakh. I mean, whatever is the margin. So right now ITC is 401. So if I were to buy at 401, I mean, I'm paying, instead of 4,01,000 rupees, I'm paying 1,14,000 rupees. So that is as simple as this. Now, this margin, which is there, which is 1,14,000 rupees, this margin also is, you may not pay cash. So a lot of times we're not sitting on cash, but we have our existing holding, which we may like to pledge and then create limits on it. So you could go to demat holdings, and let's say you would want to kind of create under shares as margin rather. You could go to shares as margin on ICICI Direct, which is and under shares margin, let's say you want to pledge a particular stock, you could simply go here and pledge here, right? And if you create a pledge, you'll be taken to the NSDL website. All that you will have to do is you will have to enter which the stock, the OTP, and the shares limits will be available to your account instantly. So that's it's instant. It's on a live basis. The shares or the limits would get credited to your account. So as I said, it's a pretty simple thing. I mean, one option is that you pay the margin on a stock, which is and that margin you could pay through cash or through securities, right? And you could go on the ICICI Direct side, and there is a margin calculator that we have. And in the margin calculator, you can check any stock. So let's say if I were to buy Vocard, and I could see on Vocard, if I were to buy, let's say, 100 shares of Vocard, I mean, I could calculate how much total amount of my funds, total investment will be 1,49,000 rupees. My funds will be 62,000 rupees. The funding here will be 86,000 rupees. This 62,000 rupees also, as I said, could be placed through my securities margin, which is my existing shares. I could place that and create limits. If I buy, let's say, 100 shares of Vocard, and if Vocard were to give a dividend of 5 rupees, that 500 rupee of dividend also gets credited to my account because the shares are credited to the demat account of the client. So the shares always remain in your account, and all that you're doing is you're taking the funding from ICICI Direct. Just 2 points I want to kind of bring to your notice is also that one, there is an interest component, right? So when you are buying the shares, shares is margin. There is an interest component, and the interest that we charge, which is amongst the lowest rate in the market, is around 26 rupees 50 paisa per lakh per day, right? So if you have taken a lakh rupee of funding, I mean, our lowest is, it depends upon the point that you have taken in ICICI Direct. So you could go to ICICI Direct and look at the brokerage plans, and then let's say you've taken the highest value brokerage plan, which is at 7 basis points you get on your cash transactions. Also, the interest rates come to 9.69%. So you're paying a one-time 9,995 rupees. Lifetime, you're paying that only once, and you get 9.69% interest rates. So if you create a large position on MTF, which is 10 lakh, 15 lakh, 25 lakhs, you could say significantly on the interest cost. So one is that you just take the best plan that you feel is appropriate, and then the cost is just, I mean, on 10,000 rupees, if you think about it, is just 2.5 rupees per day of interest cost. So that's one important thing which I wanted to kind of share. The second thing I also wanted to bring your notice on MTF is that if you are taking a position on MTF, the fact is that it is a funded position. So, if the stock were to fall, and if I'm just taking an example of ITC at 401 rupees that we have purchased a share today, and if ITC were to fall to, let's say, 300 rupees, now that's a loss, that's a risk that's getting created, right? So there are two things. One, that if the stock were to fall, you could take the delivery of the shares by paying the balance amount. So in this case, the balance amount is 2,86,000 rupees. Any point of time, starting tomorrow, you could pay the 2,86,000 rupees on your account and take the entire 1,000 shares of delivery, which are marked now free, so that you don't have to bother about any time the stock goes down or up. I mean, you can sell the price that you want to sell. The second is you have 1 year. The third is, in case there is a correction in the stock and the stock were to fall, let's say from 401 to, let's say, 350 rupees. So because this is a funded position, there will be a margin call, because we have, for every stock that you are allowed, you take, there is a margin call which you can also check on your account, where there is a trigger price. So that time you would all you need to ensure that you are having sufficient funds on your equity segment. So you could, as I repeat, you could, create the funds using your shares. So suppose you've added 5 lakhs rupees of shares, you've taken a position of lakh rupees, so you have 4 lakh rupees of available funds in your trading account. If there is a margin call, it will simply go and allocate that much of margin. So that's just the additional point that I wanted to bring to your notice, on MTF, that if you buy a stock, if there is a margin call, there would be, you need to have sufficient funds on the equity segment on your account. So broadly, I mean, if I were to say, it is a which stock to buy, I think is the first important thing. And having a conviction to buy a stock, you could, as we discussed, you could use our research, you could look at certain screeners that we have, which kind of helps identify certain stock opportunities in the market. Execution is pretty simple. I mean, as we said, you could look at MTF here, and any stock. I mean, more than 1,400 stocks is what we allow on MTF. So you could you could buy that on the ICICI Direct platform, right? And as I said, the execution is pretty simple. All that you're doing is either selecting MTF here, or on the delivery page where you are, you're just entering selecting pay later as an option. So that's the second part, which is the execution part. The third part is that you will have that in your demat account. You could sell at any point of time, and as I said, you could also use your shares which are pledged. You could pledge your shares and use that as much. So I want to pause. I mean, I'm going to look at the YouTube comment option for any comment, any feedback that you have. And we could, happy to take questions that you have. So let me just so where is the screener? I think I'm taking some questions. So where is the screener? So on the home page, as we go here, you can see the screener right on the page. So the moment you log into ICICI Direct, you see stock screener here, and the screeners are across technical, growth, value. I mean, there are fundamentals criteria, as well as all the criteria, almost all criteria that we believe you will like to kind of look at. And for people who understand technical analysis, I mean, there are a lot of technical based indicators as well. Yeah, what is the cost of margin? We've discussed the cost of margin. It depends upon the prime plan that you've taken. The lowest that we go to is 9.69%. So there is, what about the GST on interest? There is no GST on interest on margin funding. So it is only the interest amount which kind of gets levied to you. Whether we will need to pay interest on the shares you pledge. So let me clarify that. Thank you for this question. Now, suppose, if I were to give an example of a lakh rupee of shares that I have, and I've pledged that lakh rupee of shares, and I've got a limit of 90,000 rupees. Now there is no interest on 90,000 rupees. Because you've just pledged your shares, there is no interest. There's only a one-time pledge charge of 38 rupees, which will get levied to you. That's it. Or even if you pledge 10 lakh rupees, even if you pledged 1 crore rupees, only a flat charge of 30 rupees gets levied to you. There are no interest which gets charged to you. And that's a one-time 30 rupee charge. Now, out of that, let's say a lakh rupee, you use 20,000 rupees for a position, and you use that for 6 days. So you will only be charged for 6 days for 20,000 rupees. The remaining, 70,000 rupees is there as limit in your account. In case there is a shortfall, then it will pick up the shortfall. Otherwise, that remains in your account, and there are no interest charges that you pay on the funds that you've taken. Okay, so there is a question on F&O. Let me take that. We have an I value plan where we want to understand how interest is levied on Nifty sell options. So this question detours from MTF, but let me just take that still. But people who trade options, and there are a lot of people who look at options trading as well. And let's say if I were to look at the Nifty options, Nifty around 25,000 levels. In fact, tomorrow actually is Sensex expiry, and if we were to think that tomorrow Sensex may not kind of fall, a lot tomorrow in the market, opening. So if I sell, let's say, options of Sensex, so now if I am going to sell options, there is a margin which is going to get charged. Now at ICICI Direct, you could give your entire margin, I mean, whatever margins are required, to be charged here. So let's say, on this trade, if I were to just take an example again, you will be charged, let's say, ₹1,00,000 of margin or 2 lakh rupees of margin. Now this margin could be paid by securities. So you're not bringing any cash. We don't have a requirement of 50% cash margin for trading. Now, if you bring the cash, full securities, now we have two plans. One is our prime plan, right, which you can go here and see, which is our prime plan. There is no interest which is charged also, as you can see here. There is no interest which is charged on carrying positions under shares as margin in FNO. If you're opting for a prime plan, right, and the brokerage, as you can see here, will be ₹9 per lot. We further have a high value plan, which you referred rightly, wherein the brokerage is a flat 20 rupee per order for trading in options intraday. However, there is an interest which is charged, which is at the rate of 9.85%, which gets charged. So if you're on this plan, your brokerage will be lower, but my comment is that if you're using shares for trading in options, and if that's a large part of the component, then my advice would be that you could exit this plan, which is the high value plan, and opt for a prime plan at ICICI Direct, where there are no interest charged on your positions. Yeah. So let me just thanks. I think this is a good question. That can ETFs be bought under MTF? And the answer is yes. You could buy ETFs on MTF. So let me just take an example of let's say silver ETF, because silver as a commodity is kind of doing, there is a lot of interest in silver in the market. And if I were to buy 100 shares of silver, as I said, you could just go here and look at pay later. So it is ETFs, it is, and the easiest way to think about check this is on the margin calculator. So you could, let's say, if I were to buy a Nifty ETF, I could, if I were to buy 100 shares, 1,000 shares, I could just click on calculate. It will show me that it is allowed. If I were to buy, as I said, a silver ETF, let me just see. You can see here, it will show you that you can buy a silver ETF as well. So you can buy ETFs in MTF or a gold ETF, right? Because, people talking about gold, very, very bullish on gold. There are a lot of reports on gold as an asset. So you could go and you could look at even buying gold ETF. So ETFs, stocks, all that's there on the platform. This is, a related answer is that, let's say you don't want to take a single stock risk and you want to buy a few stocks. Let's say I will, let's say look at silver also. So I want to buy a silver ETF. I want to buy a defense ETF. Let's say because defense, you do well, and I would also want to buy a gold. And I want to buy a Larsen and Toubro as well, right? So I'm creating 4 or 5 stocks, or let's say an ABB, or ABB has fallen quite a bit, and I want to buy ABB, and I can just name that this is my, for next 6 months, this is a trade that I want to play, and I could, give it a view, and then I could buy this MTF also. So I am creating a portfolio of 5 stocks, and then I'm taking a position in MTF for the next 3 months, 6 months, whatever time I feel, I could. So I'm not putting any cash on this trade. I'm leveraging my demat account. There is not a single rupee of paisa of cash which has got incurred. I mean, it is my existing share which I've pledged, and I'm taking a view for the next 6 months on the markets. So that's something also, which is possible on the platform. I'll just go and take see a few more questions. ETFs. So we're gonna speak in English in this, so I will continue with that. Um, Last time when I used MTF, I had to sell my holding, but I was rejected to pay the balance. No, it is not. You could, let me also just add one more thing that, there are in MTF, you could go to the open position page and square off the position. So there is no stress. Any point of time, you want to close the position. You want to close the position today, you want to close the position tomorrow, any time for within next 360 days, you could close the position. That's point number one. Point number two is when you have pledged certain securities and you want to sell those stocks, one of the simplest thing that you could do is, you go to shares as margin and you could go to pledge securities and you could click on spot sell. And, here itself, you could sell the stock immediately. So you're selling the stocks immediately, on your pledge securities. Pledges, I mean, as I said, the charges, there are only pledge charges, which is there in your account on pledging your shares, which is 30 rupees. And the interest that we charge is 9.69%, which is amongst the lowest interest rates which exist in the market. Margin, can the margin call be funded by the limits we've created by pledging us shares? Absolutely, yes. That's what we said. If you have created, let's say, again, I'll take an example of 5 lakh rupees of limits on your shares, and you've used 4 lakh rupees and you've used, let's say, 1 lakh rupees. So you have 4 lakh rupees of balance. You're only paying interest on 1 lakh rupees. On the 4 lakh rupees, you are not paying any interest. Now you have just pledged it so that next time the market should fall and there is a shortfall, 20,000 rupees of shortfall will get credited to your account and it will block the money from that 20,000 rupees. So there is, the point is that you can use your limits on your shares to fund your margin calls on MTF. That's the way, I articulate this thing. So suppose I buy 1,000 shares of Tata Motors now and sell 500 after 7 days. So every time you pledge, so first time is when you bought 1,000 shares, there will be pledge charge, MTF charge. And sorry, so let me also clarify. When you are pledging a stock, the pledging charge is only one time, and if you don't unpledge it for next 6 months, there is not a single charge. On MTF, there is a charge, when you're pledging securities. So on 1,000 shares, you will be charged for 1 day. When you're selling 500 and then you're selling another 250 after 5 days, another 250, then you will have to be charged 25 rupees on each of these 3 days. So that's the pledging charge that you will get charged. So if you've done 1,000, or if you do 10,000, if you do 50,000 also, for 1 day, you'll be only charged a flat 25 rupee pledge charges. If you enable high value pricing, the interest shall be charged of 0.007%. That's correct. So I'm just looking at some options. Stop loss option is not available on MTF. So the thing with stop loss is that you could look at placing a stop loss for a day. That's presently where we are. We are working on getting GTT on MTF. It should take 3 to 4 months more for us to do that. Therein you would be in a position to place a profit and a stop loss together, valid for the 1 year. So you could place a stop loss as well as a profit target price for the next 1 year. So right now you could place a day order on MTF. So can I sell MTF secured stock instead of cash secured? So sorry, I couldn't really get the question, but if it's like if you have a stock which you have holding under delivery and you're holding a stock under MTF. So within, let's say, if I have an ICICI bank, 1,000 shares at delivery shows I paid full money, and there is another 300 shares which are MTF. I could decide to sell either. So either of it is something which I could do. Just one question on capital gains also on MTF. MTF is treated under equity segment, under the equity capital gains. So, if you are trading, it is, unless the assessment officer has a different view. MTF is a short-term capital gains if you sell within 360 days. And if you happen to roll over on the last day, which is 360 days, and I'm using the word rollover means you sell and you buy. That means there is no delivery. Then it will qualify for long term. Then you will get 1.5% tax. If it's sold within 360 days, then it's going to be 20% tax. Short term capital gains. If you happen to roll over on the 360th day, then it will be trade which kind of becomes a long term trade because you've held that for more than a year. Uh, so we would want the I said direct to alert on webinars. So one of the things that you could do is you could follow us on YouTube because a lot of these content and a lot of our videos, webinars we host on YouTube. If you just have to go to YouTube, search for ICICI Direct verified channel, and just subscribe because then whatever webinars that we do, you are automatically informed about it and you could attend. I mean, we do a lot of webinars on market outlook as well. I mean, where are we looking at the market? So right now we released a report wherein we have a target of 28,500 levels for the Nifty. So we would, we would kind of come out with those views and analysis, and you could kind of follow us there. Can I sell a stock in spot via Breeze API? In Breeze API, we have not built a functionality of spot at this point of time. We will work on that. And as I said, the unpledged charges will be 30 rupees per script for the full day, any value of the script, irrespective of the value of the script. No, so there is a question on interest paid on the cost of shares to get tax benefit. So let me clarify, and there are a lot of tax judgment also, income tax judgments as well. Which in fact there are judgments at High Court level and Supreme Court level also, wherein income tax, the interest paid on MTF is not to be deducted from capital gains. So if you've paid an interest, that is not a cost of acquisition, and that cannot be a part of deductibles on the capital gains. So I want to make that point clearly that if you're, if you bought the stock at let's say 100 rupees and there's interest cost of let's say 3 rupees, that can't be added on the cost of acquisition for the capital gains purposes. For people who use business incomes, they could look, there are you may consult your chartered accountants, but on capital gains, income tax would not allow a set off of the interest as a cost of acquisition. I'm just looking at certain questions. Yeah, I mean, if you're selling on different days, there will be different days of pledge charges which would get levied to you. Can mutual funds be pledged to buy equity? No, mutual funds can't be as per the regulations. I mean, you could only look at equities, stocks. So mutual funds is what you can't use. I think this question again came on capital gains. We are not capital gains as per the the prevailing law of the land. And as per the various judgments which are there, capital gains interest cost cannot be added on capital gains. However, we would advise you please look at consult your chartered accountant's accountant. And also, I must also add that it is the assessing officer which takes a completely which takes a complete view of the case. At times, assessing officers can even deny a lot of equity transactions as capital gains, saying that this is not in nature of capital, it's in nature of business. So, I mean, we would advise you to please discuss with your chartered accountant on that. Yeah. So these are some of the questions that I could see on the chat. So as I said, I mean, the product is a very simple product. There is absolutely, I mean, in the mind, I mean, it's as simple as you're buying any stock. All that you're doing is, you're just selecting pay later, and you're buying the stock. So that's the only, thing that you're doing additionally instead of buying a delivery, or you may buy under MTF. So that's the only additional thing which comes with MTF is that because it's a marginable position, there are certain times the stocks are volatile and the stock it could lead to shortfall in margin. Therein, it's very, very important that you keep additional allocated funds in your equity segment in your account, because if the funds are not there and if the markets were to fall, there is absolutely no way, I mean, for us to believe that you will want to carry the position. And we believe that if you have not allocated funds, we believe you don't intend to hold the position, and we will have to liquidate a stock. So the additional ecosystem which comes with MTF is to look at the margins on a regular basis, so that the positions are not squared off by the system. You could go to the open position page on MTF and look at that. I just got one feedback: an NRI pledge and trade on FNO. NRI cannot pledge securities as per the cannot do funding to trade in Indian capital markets. NRIs will have to do cash market, or even if they want to do FNO, they could do through the cash margins, not leveraged margins, leveraged. So that's about it. So we would kind of thank you for your time today. You could explore more on ICICI Direct platform on MTF, or you could refer our YouTube videos for this. So thank you so much, everyone, for joining the session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.